Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. And I am streaming, I had a difficulty with Discord this morning, so I'm using the web-based version of Discord to stream. If somebody watching on Discord, Bookmap Discord, can just confirm that you can hear me and see my screen, if someone would please do that. All right, I'm going to go ahead. So again, somebody on Discord, please confirm that you can hear me and see my screen. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, thank you, Tony. Can you see my screen as well? All right, sorry about that. So here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. And in Bookmap Discord, there's an Options-Doug chat channel. That is a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel, which I'll go through in just a moment. And also note that Bookmap Discord is free and available for everyone. Whether you're a Bookmap subscriber or not, it's a great place. There's a lot of great channels here for options, futures, stocks, etc. And I'm also on X, formerly known as Twitter. My name there is at Doug Pless. The focus of my presentation and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups, for entries and exits. And when I talk about setups today, I will be talking about an underlying asset. For example, setups in the S&P 500 can be taken with the ES futures, SPY shares, SPY options, SPX options, or even ES options. Questions and comments are welcome. And I will be watching All right, IcoJed says no sound. All right, I'm having a hard hold on just a moment, please. Sorry about this. All right, I should be unmuted. Can someone confirm on Discord that you can hear me now? I think I'm unmuted. Okay, great. Sorry about that, everyone. All right, questions and comments are welcome. I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. So please feel free to post, and I will do my best to answer your questions and respond to your comments. Here's my agenda for today. This is Friday, October 20th. This is the October monthly options expiration. So for today, what I want to cover is news items, and that is the options expiration for today. That wraps up the week. Then I'll go through my positional analysis. Then I'll review some setups from this morning, and then I'll talk about the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, I'll be glad to do that. Please let me know. All right, so the big event for today, options expiration, and let's take a look. Options expirations are often turning points in the market, and a lot of that, which direction, depends on the market maker's position on the gamma curve, as well as the call or put domination of the expiration. So this is the expiration concentration chart in Spotgamma for the major indices, S&P 500, Nasdaq, and Russell 2000. What this is showing, and this is showing delta notional on the vertical axis and expiration date on the horizontal axis. This is the October expiration. The blue bars are showing put delta, negative delta. Orange bars showing call delta. So you can see there the blue bar is dominating. There are more puts dominating this expiration. So this is a put dominated negative gamma expiration. And typically as those puts expire, especially today, they're quickly losing value due to charm, which is the change in delta with the change in time as time passes. And also if implied volatility starts to drop, and that was key for today, to watch implied volatility, then those puts quickly start to lose value. In this situation, traders are long puts, market makers are short puts, and as those puts expire, they can buy back their short futures they are using to hedge their position. So a put dominated expiration could potentially lead to a put Vanna rally, and it's complicated by geopolitical events, so that Spotgamma was speculating that traders may want to hold puts over the weekend due to the war in the Middle East and other geopolitical events. But anyway, looking for a potential put Vanna rally maybe on Monday. So that's that does complicate the situation a little bit. All right, so that is the big event for today, options expiration. Note for SPX, there are two expirations typically on the month, the AM settlement and the PM settlement. So the AM settlement happens at the cash open. That's already done. So some of those SPX options have already expired. All right, and that's it for the news, options expiration. Let's go to positional analysis now. I'm going to start with the S&P 500. And this is the ES futures in Bookmap. And before I take a closer look at this chart, I want to take a look at a larger time frame. So I'm going to start with SPX and first point out the major turning points in the market. So this is just price and key levels. So I'm going to start with price. This is the September 15th expiration, very large expiration, and that was a call dominated expiration. As those calls expire, calls that are stabilizing the market expire, this is typical of a call dominated expiration. The market moved lower and then reversed higher. This is October 6th, the jobs report. Gamma squeezed after that report. That was a negative gamma environment. And then finally, SPX found resistance around the upper weekly expected move last week. I think probably due to a variety of events, the sharp increase in treasury yields, as well as the war in the Middle East, the invasion of Israel. All right, so now we're up to the options expiration in October. Very negative gamma, put dominated expiration. So we'll watch today and tomorrow and see what happens if this put Vanarelli potential put Vanarelli takes place. All right, so the SPX is down back to the level that found support before, around 42.25, or actually this is showing the low at 42.16. All right, so those are the major turning points. This is a 30-day 1-hour chart. Let me point out the levels on this chart. The dashed purple lines are showing the lower and upper weekly expected move. That's based on the options market. 68% of the time, SPX can be expected to trade within that range. That changes once a week. I change that over the weekend. And then the dashed blue lines are showing the lower and upper daily expected move. That changes every day. Again, a 1 standard deviation move. SPX is expected to trade within that range 68% of the time. And it looks like SPX is above the lower daily expected move and now making its way potentially above the lower weekly expected move. So we'll take a closer look in just a minute, but both of those levels, the lower daily and weekly expected moves, in play for today. All right, the next levels that I want to point out are Spotgamma levels. These are proprietary Spotgamma levels available to Spotgamma subscribers. I'm going to point out the key daily levels. First of all, here's the put wall. That's at 4,200 today. That's a strike with large net negative gamma that can be expected to act as support. And note that level did shift lower from 4,300 yesterday to 4,200 today. So that's bearish. That potential floor for price did move lower. All right, the next level up is 4,300. That is the absolute gamma strike. That's a strike with the largest absolute negative and positive gamma. That's where the most gamma-weighted open interest is concentrated. The next level up is the volatility trigger. That is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility when market makers are trading in the direction of price to hedge their delta exposure. On the other hand, above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. And finally, the call wall at 4,400, that's a strike with the largest net positive gamma. that can be expected to act as resistance. So the put wall at 4,200 being the potential floor, 4,400 the call wall being the potential ceiling. And note that SPX is trading well below its volatility trigger. All right, so those are the key daily levels. Now let's take a look at another SPX chart, shorter time frame, just to focus in on the levels that are in play for today. So here's the lower daily expected move. SPX traded slightly below that, now trading above. These are a couple of Spotgamma levels, combo L2, combining SPX and Spotgamma into one level, and then the 4250 level. And that 4250 level was noted as support in the Spotgamma AM Founders Note. Here's the lower weekly expected move. All right, let's go to Bookmap now. So in Bookmap, I have my own cloud notes. I'm showing SPX levels. So there's that 4248 combo 2 level as well as the 4250 level. And I do have lower daily expected move and lower weekly expected move. This is for ES, so slightly different than SPX. And note this lower daily expected move, almost to the tick, acted as support. And that was just around the SPY 422 level as well. And I also have, as I mentioned, SPY levels. So SPY 422, that is not a Spotgamma level. That is just a round number for SPY. Here's this SPY 426 large gamma 2 level. And around that level, and also ES 4300, acted as resistance this morning. So far, that is the range for the day. Right around SPY 426, ES 4300 as resistance, the high for the cash open, and then SPY 422 as well as the ES lower daily expected move as support so far today. All right, note there is a difference in excuse me, note there is a difference in price between ES and SPX. And right now that price difference, ES minus SPX, is around 25 points. So I'm showing SPX 4250 at ES 4275. So ES minus SPX is 4275. And take a look at questions, comments. So Jono, thank you very much for confirming sound in YouTube. Excuse me. And trading for a living, good afternoon to you as well. Welcome, glad you're here. Okay, so those are the levels in play for the S&P 500 today. Shifts in levels, I talked about the shift lower in the put wall for SPX, that is bearish. Volatility trigger actually shifted slightly higher, not really significant, from 43.45 to 43.50. For SPY, the volatility trigger shifted lower. The put wall also shifted lower to 420. And then the call wall actually shifted higher to 460. That is not significant. That's well out of play. And the absolute gamma strike shifted lower to 425 for SPY. So that's shown right here. So we're overall bearish, shifts lower in the key daily levels for the S&P 500. All right, let's take a look at Nasdaq now. So here's the NQ futures in Bookmap. Let's isolate the QQQ levels first. So here's QQQ for the day. This 360 level as well as the combo level just below that, acting as resistance just after the cash open. 360 is the absolute gamma strike for QQQ. That level did shift lower from 365 yesterday to 360 today. And then around this combo level acted as support. And now this combo level may be acting as resistance. The combo levels combine QQQ and NDX gamma weighted open interest into one combined level and then converts that price to an equivalent QQQ price here. All right, so those are the QQQ levels in play for today. Let's take a look at NDX. And there's this combo level, the combo levels, resistance, more or less as support, price undercut a bit, and then now this combo level acting as potentially as resistance. So the NDX levels have definitely been in play for the Nasdaq today. All right, let's take a look at the NQ now. So here's that combo level acting as resistance. And note that NQ traded down to its lower daily expected move. Found support there along with that combo level as well as QQQ 355. All around that level. Now it looks like this lower weekly expected move as well as that combo level may be acting as resistance. All right, Momo, I don't know what all this means. It's not really relevant to what I'm talking about. So if you could please cease posting this information that really is not related to what I'm talking about, please. All right, so that's Nasdaq levels in play for today. I'll talk about setups in a few minutes. Shifts in levels for Nasdaq. For NDX, volatility trigger shifted lower, put wall shifted lower, call wall also shifted higher, and the absolute gamma strike shifted lower. So overall, bearish shifts lower in the NDX, and then for QQQ, the put wall and the absolute gamma strike shifted lower. So the put wall shifted lower across the board for SPX, SPY, NDX, and QQQ. And then the absolute gamma strike shifted lower for SPY, NDX, and QQQ. So bearish shifts lower in the S&P 500 and Nasdaq. All right, let's take a look at gamma notional now. And Momo, please stop. I don't know what you're talking about. So what you're posting here is not really relevant to what I'm talking about. So please take it elsewhere, please. All right, let's take a look at gamma notional. And clear the screen here, gamma notional. All right, this is market makers' position on the gamma curve at the beginning of the day. For SPX, SPY, NDX, and QQQ. I really don't look at NDX. I focus on SPX, SPY, and QQQ. Note all these numbers are quite negative. Much more negative than yesterday. So gamma notional shifted lower, and that can be expected from the price action yesterday. This is market maker's position on the gamma curve. So in this position, traders are long puts, market makers are short puts, and they have to trade with price to hedge their delta exposure. All right, so we know that this is a put-dominated expiration. A lot of puts expiring. Market maker's position on the gamma curve at the beginning of the day quite negative. All right, let's take a look at the Vanna model now and see how market makers can be expected to react with changes in price and applied volatility. Okay, so this is SPX Vanna model. What this chart is showing is market makers delta notional. That's their delta exposure. On the vertical axis, price on the horizontal axis. There are two curves on this chart. And the first, the light gray curve, shows how market makers delta notional changes with changes in price only. The purple curve adds implied volatility to the equation. That shows how market makers delta notional changes with changes in price and implied volatility. And that change in delta with the change in implied volatility is the Vanna effect, hence the name of this chart. And Vanna is a second order Greek. All right, let's take a look at some prices now. Right now, SPX is trading right around 42.50. 42.51. So that's right here. So what this is showing, if price increases and applied volatility drops, market makers can buy back short futures. They always want to remain delta neutral. So as price increases, implied volatility drops, their delta notional is dropping, and they can buy back short futures. On the other hand, and let's see, the high of the day was for SPX right around 42.76. That's up right around here. So as price was falling earlier today, this worked both ways. Market makers delta notional was increasing, and market makers had to sell futures to hedge their delta exposure. All right, so that is the Vanna model for SPX. Note this curve is very typical of a negative gamma environment. This very steep skew to the left, typical of a negative gamma environment. Market makers trading with price as price moves up and down and implied volatility changes. All right, SPY is trading at 424 right now. The low of the day was right around 422. 422 around here. 424. So as price, again the same thing. Price increases, implied volatility drops. Market makers can buy back short futures. On the other hand, for SPY, the high of the day was 426. Right around here. So again, it works both ways. Oops. Market makers have to sell futures to hedge their delta exposure. Again, remember they always want to remain delta neutral. Finally, let's just take a quick look at QQQ. QQQ currently trading 357. And again, on the very steep portion of this Vanna model here. All right, so based on this information, I had really a primary thesis and an alternate thesis. So the first was bearish based on the shifts in levels. I talked about the shifts lower, especially the put walls across the board for the S&P 500 and Nasdaq. Also the shifts lower in the absolute gamma strikes for SPY, NDX, QQQ. Based on that information, my thesis for the day was bearish. Traders were looking for and expecting lower prices, and they're positioning themselves in the options market for lower prices. On the other hand, there's this put-dominated options expiration potential put banner rally. And we can see some of the potential here. This is let's go back to SPX. What this curve is showing, this is a gamma model. So when I talk about the gamma model, here it is. And note the green curve, that is the current expiration. That's for today. And the gray curve is next expiration, so that's Monday. So this is showing that a lot of gamma is going to be coming off today. So the gamma curve will shift pretty significantly on Monday. So there's less negative gamma, puts expire, and there will be less hedging pressure based on that. And note also how this curve, the slope of this curve changes pretty substantially right around, let's say 41.25, 41.26 there. Indicating again, market makers' need to hedge will slow substantially at this level. All right, let me check for questions. All right, Nico asks, is there a way to calculate the weekly and daily supports and resistance based on options without using Thinkorswim? Just a website data? Well, there are a couple of ways. If you're a Spotgamma subscriber, Spotgamma provides a let's take a look at it. Spotgamma provides a a 5-day move, implied 5-day move, and applied 1-day move. Otherwise, I'm just used to getting my data from an options chain. I use Thinkorswim. I'm sure you can find an options chain on some web-based site. I don't know what. A lot of trading platforms have web-based platforms as well. All right, so there are a couple of options there. Again, I just use an options chain. I use the options implied move. All right, SK Gango asks, do the gamma levels and TOS automatically update daily or need to be adjusted daily like in TradingView? So there is some manual intervention for Thinkorswim. So what, let me see. Oops. Spotgamma provides these integrations for a variety of platforms. This is what I use for Thinkorswim. So I have to download it here, and I just copy it, paste into Thinkorswim. It takes about a minute, and that updates all the levels for SPX, SPY, QQQ, IWM, I think, as well as the futures. Right, so there is some manual intervention and Thinkorswim, but that one chart covers all of those instruments, and it takes about a minute. So it's no big deal. And past 2910 asks, what do I mean delta neutral? I mean, it means no delta exposure. Market makers want to, all their job is to make markets and hedge their risk, manage their risk. So they don't want to have any delta exposure. Delta is a exposure to changes in price, and they want to remain delta neutral. All right, so I hope that answers your question. All right, so Stephen asks, what do you mean the gamma will pick up or go off in terms of the expiration today? It will come off. So the gamma is expiring today, so a lot of that is put to expiring today, basically, is the way to look at that. So that's gamma curve that I showed will, there's going to be less negative gamma, fewer puts, the puts expire, so less hedging pressure. All right, so let's take a look at some setups now. This is the hero chart for S&P 500. What this chart is showing, and you're welcome, Stephen. Hope that answers your question. What this chart is showing is price for SPX, and you're welcome past 2910. All right, so this chart is showing price for SPX and the hero signal, hedging, impact, real-time options. So everything that we've looked at so far is static data, pretty much based on gamma-weighted open interest that's updated once daily, sometime in the middle of the night. Now this is real live data. This is showing options trades and market maker hedging activity for a combined signal for SPX, XSP, SPY, and ES futures. I'm going to zoom out on this chart, and what this chart is showing is options traders have really been taking positive delta positions all day. The hero signal moving higher indicates traders are taking positive delta positions. I'm going to take a look at this quickly. So they're buying calls and buying puts. Call buyers more aggressive. I've had some difficulty with this chart zooming, so I'm going to go back to the total signal. So we know traders are taking positive delta positions. Well, there it still jumps. All right, so let's go take a look at Bookmap. Go back to ES. So we know that pretty much from the open, traders were taking negative delta positions. So really, hero was not providing any clue for this move lower in the morning. The clue was primarily in order flow. This reversal at the 4,300, 426 level. And you can see this order flow, cumulative volume delta moving lower. That's the dark blue line. Light blue line is showing iceberg orders. Traders, not large, but larger traders, not a large number of icebergs, but iceberg orders are what larger traders use to hide their size. And then also the yellow line showing stop orders, helping to fuel the move lower. So there is, underneath that green dot there, there's an indicator for iceberg orders selling. Sell stop orders shown by the yellow line in the subchart, as well as these red dots, moving price lower. Then we know that traders were taking positive delta positions, and price reverses higher, right at the lower daily expected move. Makes a lower high here. You can see the shift in order flow. It's pretty apparent here. These volume dots are showing market buy minus sell. So a magenta dot indicates there are more sellers than buyers. Green dot indicates more buyers than sellers. So you can see these clear shifts right at 11:30 as well as right around 12:15. Aggressive sellers on the way down. Very large iceberg order comes in. That's 6,000 contracts. Large traders, 2 executions with 6,000 contracts. And that certainly helps to fuel the move higher. That's shown by this sharp jump higher in the light blue line in the subchart. All right, so it looks like S&P 500 found resistance somewhere between VWAP, that blue line there, as well as the 4260 level. Let's go back to Hero and see what options traders are doing. So they may be taking their foot off the gas. Let's see. All right, so in the last hour, traders have still been taking positive delta positions, and then around 2 o'clock they started taking negative delta positions. All right, so there were a couple of setups. First, the short in the morning, really just based on watching order flow and Bookmap, and then the long setup in the morning, really based with the options traders Hero signal contributing to your thesis for or narrative for a long setup, as well as your thesis for a put Vanna rally. Let's just take a quick look at VIX. And here's VIX for the day. And note the drop lower in VIX, right around 11:30, maybe just a few minutes after. So the break lower in VIX, options traders taking positive delta positions. All right, let me check for questions. All right, Tony asked, if you're looking for intraday trend reversal on Hero, would you prefer SPX or SPY? And what rolling window would you prefer, split puts and calls or combined? So for the Hero signal for S&P 500, I typically look at the combined signal. That's what I'm looking at now. The combined signal, combining SPX, SPY, XSP, and ES futures all into one combined signal. And by default, I'm looking at the 1-day rolling period. So one thing that may happen if I see Hero flatten out in the afternoon, it's not providing much information, then I will change this rolling window to 30 minutes to get more information. But today I think there's plenty of clarity just from this 1-day rolling window. And then I do look at puts and calls. I looked at that before, so this does provide some additional information. And here, note we're just kind of looking at very short time frame squiggles. This just could be all these signals oscillate up and down a bit. So traders have been buying calls. Looks like in the last 15 minutes, they've taken the foot off the gas. Sorry about that, nothing I did. And put line. So the orange line is showing calls. So it looks like right around 2 o'clock, traders started buying puts again and started selling calls. So when both of these lines are going in the same direction, that's a powerful signal. So that is a definitely a bearish signal when both of these lines are turning in the same direction. All right, so Tony, I hope that answers your question. So I prefer typically the one day rolling window total signal. I do separate out puts and calls, and I think that provides more information, more clarity. And Troutfly says, thank you for simplifying and explaining things so us beginners can understand and learn. And you're very welcome. Thank you for your kind words. And past 2910, can I see anything on the chart connected with the geopolitical situation? No, not really. Oh, Jono says his hero has the same Zoom issue. Please, please, please contact Spotgamma support about that. I have sent a couple of emails. They indicate they are not able to recreate the issue. I really haven't. That's all I've heard from them. I thought it was me only. Please, 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 Jono, please contact Spotgamma support, info@spotgamma.com, and let them know you're having that issue as well. All right, so that is the S&P 500. Now, so far for the day, options traders net still taking positive delta positions. That may be rolling over a little bit. All right, SK Gengo says he or she has the same issue with Hero again. Please contact info@spotgamma.com with your issue. All right, so Ikajad asked, is the put Vanna rally that is expected on Monday reflected in the elevated call prices for next week? Not necessarily. It's just related to the amount of puts expiring today, the put gamma and the negative gamma environment for today. So the elevated call prices, anytime prices are elevated, that indicates increased demand. So if there's an increased demand for calls, that if prices are increasing for calls, that could indicate increased demand. So maybe traders we'll take a look at the key daily levels on Monday and see how they have changed, and it may take several days for the after the expiration for the levels to firm up a bit. All right, let's go take a look at Bookmap. Go back to the S&P 500, then we'll take a look at Nasdaq. So S&P 500 heading back toward the lower of the day. Break of this trend line as options traders started taking negative delta positions, selling calls and buying puts. Let's take a look at Nasdaq. So here's the resistance at this combo level. Also the NDX volatility trigger, QQQ. Let's see what, 359. Let's take a look and see what options traders were doing. Go to Hero for this combined signal. I'm going to zoom in. So this combines NDX and QQQ into one signal. And here in the morning, this was much more clear. Nice divergent setup. Right around 9:40, 9:45, traders started taking negative delta positions, and then price followed just a few minutes later. So let's go back to Bookmap. So we know that traders were taking negative delta positions right in this time frame here. Then price finally breaks below VWAP and this cluster of levels there, the 740 volatility trigger, and aggressive sellers start to come in. That's shown by the magenta volume dots. Looking in the subchart, cumulative volume delta turns lower, and then sell stop orders shown by the yellow line there start to fuel the move lower. Those are shown by these small red dots here. Aggressive sellers, options traders taking negative delta positions, aggressive sellers, sell stop orders, and fuel the move lower to around the lower daily expected move, also this combo level, as well as QQQ 355. All right, so that's Nasdaq now turning lower at pretty similar to the S&P 500 between VWAP and this cluster of levels here. Lower weekly expected move, 358. Let's go back and take a look at Hero. So pretty similar to S&P 500. Options traders right around 1130, taking positive delta positions. Price reverses higher. They take their foot off the gas, and now Nasdaq is starting to move lower. All right, let's take a look at some stocks. All right, what I did this morning is I ranked my watch list by weak hero signal. This order has changed a little bit, but in the morning, the list had Apple, Netflix, AMD, and Microsoft. So we'll take a look at all those. And actually, this S&P 500 was a strong signal this morning. So let's start with AMD. So note in the morning, traders taking negative delta positions. Here's a flow alert indicating significant options activity. Let's go take a look at Bookmap. Go to AMD. And Tony asked, can I cover Goog today? I have Goog L. I'll take a look at that. All right, so here's AMD. Not a lot of range. Flow alert comes in. Traders taking negative delta positions. Price moves lower. Let's go back. Go back to Hero. And next on the list, Apple. And in the morning, traders taking negative delta positions. Note the very important level there at 175. That's the hedge wall, key gamma strike, and put wall, all combined at 175. And this may be very difficult to see, but there is an alert here. Let me just zoom in on this just a bit, see if we can get a little bit more clarity. Yeah, so here's the alert. And divergent short. Hero moving lower. Price briefly makes a high, then moves lower. Let's go take a look at Apple. Oops. Here's Apple. Note the huge opening print. That's this dot right here. There's the 175 level. Traders taking negative delta positions. Price moves lower. Microsoft was on that list. Let's take a look at Microsoft. Another huge opening print. Let's go take a look at Hero. There's Microsoft. $330 is the key gamma strike in the hedge wall. Another flow alert. All right, so we saw Microsoft and Bookmap. All right, let's take a look at Google. Pretty similar picture. Sharp move lower, reversal higher around 1130. Huge opening print. Let's take a look at Hero and see what options traders are doing. Note the Hero signal, and what I'm talking about here is this Hero signal, comparing the Hero signal for today with the last 5 days and the last 30 days. So for example, for Netflix here, this is the Hero signal for today, shown by this round dot, showing it as the weakest that it has been in the last 30 days. That's the entire range of the slider, as well as the last 5 days. That's shown by the colored portion. All right, let's take a look at Google, the Hero signal for Google in the middle of the range, but still moving lower in the morning. Traders taking negative delta positions and reverses higher right around 1130. Let's take a look at Netflix. I don't have Netflix in Bookmap, but we can take a look in Hero here. So short setup in Netflix, and the key was this reversal at the call wall at 410. So initially traders were taking positive delta positions, and then they started taking negative delta positions as Netflix hit the call wall at 410. All right, those are the stocks that I wanted to take a look at. And Tony, sorry, I don't have Google. I have Google, very similar. All right, let's take a look, final look at the S&P 500. All right, S&P 500, SPX turning down back toward the low of the day. VIX turning up, still not near the high of the day. Let's go to Bookmap. Go back to ES. Notice that large traders are buying with iceberg orders. That's shown by this rising light blue line. So large traders fading this move lower. They are buying weakness. That's pretty typical. Large traders with iceberg orders buy weakness and sell strength. In this case, they are buying cumulative for the day. And I open, that starts around 7 a.m. when I open up Bookmap. 6,512 contracts positive. And no cumulative volume delta for the day is also positive. Finally, let's go back to Hero. And notice also the notional value for Hero is also positive for the day. Net for the day, traders are taking positive delta positions. All right, my time is up. I want to thank everyone for watching. Thank you for your questions and comments. And please, anyone who is using Hero and is having the same issue that I have had for several weeks with this auto zoom, please contact Spotgamma support. Let them know that you're having the problem. That is info@spotgamma.com. All right, everyone, we'll watch for a potential put banner rally on Monday as these options expire today. And so we'll see what happens on Monday. Everyone have a great weekend. Thanks for watching. Thanks for your questions and comments. And I will see you on Monday. Thanks. Bye.